Good day and good morning, good afternoon. Dear Heavenly Father, thank you so much for today, and thank you for all of your provisions, and thank you for family and friends, and I thank you for your grace and your mercy and your kindness and your goodness to us. And I ask that you would provide strength and discipline and wisdom and discernment while going into the markets this morning. In the name of Jesus, Yeshua, amen. All right. So another day where we've got very little news impact going on. Just a few yellow folders today. So I don't know if we're gonna see anything special today or what, but the volatility still seems pretty good. So regardless of the news, we should have lots of opportunities. I just landed a trade right as I'm gonna get into this again right now, actually. Just before we opened, I placed a trade right on this bottom pivot, and then it took profits up here. What we're opening started at $10,077.77. And I think let's go just break things down in Alveo again. Oh, Larry, good to have you back. Good morning. It's been a few days, but it's good to see you. How are you doing? So we're gonna break things down here in just a sec, but before that, I'm gonna clear all this stuff. Here's last night through the Tokyo session through the afternoon. I faded into these buys, and I kept fading into these buys, and through the Tokyo session just kept going against me. This was the Tokyo session all through here, and it was just really dead. But it eventually faded back, and I let my position stay on, and I just set my alarm to wake up for the London Open, and so I ended up closing out a bunch of positions here, which was good, and made a good chunk of profits on the day. I needed it too because yesterday I ended up taking a loss because Trump said something in the afternoon, and I had a little position on, and I don't know if that's, oh yeah, it's back over here. I ended up taking a loss on this run up. I was shorting, so I took a big chunk of loss there, and then tried to make some of it back, and then broke even in the later in the afternoon. And then in the Tokyo session, I made this big run back. So that's what happened there. I'm gonna clear all this stuff off and start over though. Remove all this. I'm gonna get into another buy. And Alveo is still being really slow to load orders, but it seems to be working. So, and it is pushing down again. We'll probably get into another buy here in just a sec. Yeah, let's just get into one more right here. Okay, and then we'll go break things down from, go look at the daily. Still tired, Larry, I am with you there. Did not have a good sleep last night. I did not have a good sleep. But let's push through today. So, on Monday we had the market, it gapped way down right in here, and it tried to make a run for the downside, but it was just so early in the day that all the buyers stepped right back in, and so we ended up closing yesterday up with a big strong bull candle, bringing those bulls back into the market. So that's how we left off. That's how the week started off and where we're at today. I'm gonna buy here again also. We got a pretty strong down run coming in. Buy a couple here. So yeah, sorry, that's where we left off with a really strong bull candle into yesterday. And then let's go down to the hourlies and we'll look at what happened through London. So a really consistent up push through yesterday on the hourly. And then we had this up leg through here. This was the London push through the Tokyo in, and into the London session. We had a 50 pip run up. And then here we are pulling all the way back down here. This is now 44 pips back down. So lots of big swings at the moment. And let's go down to the 5-minute. Yeah, and then we've got this cycle right here running down almost 30 pips. It's 26 pips. Where are my orders? They're not showing up. I don't know what's going on, Alveo. Struggling a little bit. So we got this down push now coming into this big uptrend that we've had all through yesterday. And let's just put this trend line in here. Something like that. We had this bottom come in this morning, and we're coming right into a second attempt to break down. Kind of feel like maybe we'll see a double bottom come in here because of the upward strength, but this could also be the chance for the trend to break. And then let's go down to the 1 minute chart and see if these trades start loading up. Larry, I'm still using, I'm supposed to be using 50 pip stop loss, not 35. Because these swings are so big, my adaptation is to use 50 pip stop losses and 3 pip take profits. But none of my orders are showing up now. Cannot trade till your orders are completely loaded. You know what? Okay. So now that we've broken down the charts, I'm going to close this down, and then we'll go over to MT5 while this figures itself out. But I just want to be able to come back over to Albio because it's my favorite. So let's go back over to MT5 while that loads up. I'm doing the same thing. Yours either. Your platform's still struggling too. It's not wanting to load. Holy cow. Hold on one sec, Larry. My cat is just trying to barge in such a panic. So funny. Okay. All right, we just scooped up some of those profits. So mine is showing up now. I reloaded. Okay, I just need to get mine going again. One sec. Okay, so do we have MT5 back? So we just scooped up some of those profits. We'll take a loss on the losing side, get rid of that top trade. And then as this pulls back more, we can buy back into that. Looks like we're going to have a good session. It's good volatility. Okay, on this down push, I'm going to buy back in here. And that target's not quite in a good spot. We want that target to be below that pivot. So as this comes back down right here, buy that again. And one more right in there. All right. Albio's taking its time, but that's okay as long as it comes back. So if we can get some more profits right in here, then we can take off another one of those losing trades and then get that break even point nice and close. Keep it as close as we can. Did you have a good weekend and a good week? You went to go see that concert. Wasn't that what you were up to? Vin came in yesterday too, but their clocks still haven't changed over, and they won't change over to the end of March. So he showed up like kind of like an hour into our session yesterday. So we'll see if he comes back again, and we'll trade with him too if he comes back in. My Albio is not loading again. Just gonna shut it down and try it again. All right, so where is this market going? So our previous low came down and it bounced off this red line, which I've already got in there. That's the 1.162 level. We came down and bounced off of it an hour or almost 2 hours ago. Wait, yeah, that is 2 hours ago. And then we made a new low that's a little bit higher. So at the moment, we've made a little bit of a pivot higher. So we'll see if that buying energy stays with us, or if we're going to try and break through and head back down. It's kind of hard to say at the moment. Okay, I'm just trying to get LVO going again. Okay, so we took some profits on that one. So we can just peel off of one more. And that gets us ahead. And now we've just got one last trade sitting here on the books. And we can just let that one run up and hit, or it can run back down again, and we're in good shape to do it all over again. We're in profits already. And the market hasn't come back up to it. So that's just what we want. Okay, as that pushes down, I'll buy it again. Can push a bit lower. Need those targets to start to come under those recent highs if we're going to buy again. We've got to get the targets under here. Under those bodies and that previous high right there. So it's got to drop down a little bit more. Here we go. So we can buy one right here. And that target comes in just below that line. And then if it goes all the way back down, we'll add a couple trades down the very bottoms again. And my Alveo is just not wanting to load. I'm going to try and shut it down again. Okay, there's another profit. And we still got the last one just floating up there. So that's a good start to our session. Oh, Larry, I don't know. Yeah, I feel like maybe, gosh, I just looked at my accounts and Hedge Junior is up. You mean you've got your hedge fund account back and you didn't request a review? So they just gave it back to you. Is that what I'm understanding? I wonder if they're like moving accounts around right now and that's why I can't load. Like, do you think that just happened right now, Larry? Let's see if I can try and get mine loaded back up again. Yeah, I think it's just happening. Okay. Maybe that's why I'm struggling to get mine open. Sometimes what they're working on in the back end, it just doesn't want to open. No letter from Ron. Do you think like your stats have been really good? Like, did it earn back, or do you think they just kind of randomly gave it back? Hope it isn't an error. Yeah. Does it seem tradable? Like, can you open a position in there? Okay, so we're bouncing off the red line now. Just take another buy, right? Oh, that's not a good buy. Okay, should not have done that. Okay, I'll have to wait for that to pull back down further. Stats have been good. Nice. Well, that would be really nice if you just got your hedge fund account back. Has it been like some weeks that you've been without it? Yeah, it's been some weeks. Well, that would be just super cool if you just earned it back. Like if they were just randomly going through and doing some reviews of people's accounts, that's definitely a possibility. And I just can't get mine open. My Alveo just doesn't want to open. And does it seem like it's letting you trade in it? But or not? It seems like it's operational. What's going on? Now it looks like my MT5 is frozen. Oh, no, it's okay. Okay, I'll add a buy right here. And then we'll get into two buys back down at the bottom. But I gotta get rid of, I've got one position that shouldn't be there. I've got two positions where I should only have one. Reggie, oh, Reggie Ross. Hey, Reggie. Nice to have you this morning. How can you get Alveo? Well, you can go to Trader on the Street and you can sign up with them. And Trader on the Street is a trading education program, and they provide the trading software, Alveo, and it's a really good trading platform. And you'll get a bunch of really strong trading education with Trader on the Street, and you get like a whole program that you can work your way through at your own time. I've been with them for years. I'm not paid by them in any way. I truly really like what they offer, and yeah, I've been with them for years. So I have their platform as well as what I've got here. I'm trading in FTMO. Yeah, an FTMO account in my MT5 here. Yeah, it's good to have you with us. How did you find us? Through YouTube videos, or how did you find us this morning? Yeah, you're very welcome. Are you new to trading? Oh, through YouTube. Nice. That's cool. I think you're probably the first person that I know of coming through YouTube. We've been at this a few weeks now, but a couple of the guys that show up with us, like Larry here and Vin, they are people that have been with the trader on the street for a lot of years. And so they've kind of just known that I started this a few weeks ago, but I haven't really had any new people come in through YouTube yet. So it's nice to see that um, you found us through YouTube. Hopefully, we can provide some good value to you and meet you where you're at in your trading journey. Is trading new to you? Have you been around a while? What is your experience level at? Just briefly. Yeah, Larry's saying since 2017. I think that's the same with me. So we've been around this group for a lot of years. Okay, so we just took profit on that bottom one. So I'm going to take off that top level for a loss. So we took a small win and a small loss just to mitigate risk. And then we've got just one more trade sitting here that we can just let it do what it wants. Now it can come back down and we'll get some more buys on, or it can go up and can take profit. Whatever it wants to do is good. And the reason that's good is because of good risk management. Yeah, Larry, you're right. Yep. You, me, Kim. Yeah, we did all start around the same time, which is really cool. Still in good connections with Kim as well. Reggie says, I've been playing around since 2018, but not being able to become consistently profitable. Yeah, Reggie, it is a long, hard road to becoming consistently profitable. But it's good to see that you're still at it and you're definitely going to be familiar with what we're doing here then, or at least some of the things that we're doing. The way that I'm trading is a methodology that comes from our trading group at Trader on the Street. And we call it the wobble technique. And so, with the way that we trade here, we have stop losses, but we do what we can to not let those hit. And we do that through active risk management. So, you'll notice that I'll be taking some profits and taking losses manually at the same time, and that's to continually mitigate risk. And it's much cheaper to take losses when the market's coming back to you rather than when the market is going away from you and hitting stop losses. And so that's the premise behind this wobble technique that I'm demonstrating here. And it might take a little while to get used to because it's maybe not the standard way of trading. But just keep coming here and hang out with us and you'll start to catch on to what we're doing. It's a very valuable way to trade when you learn how to do it. and we are a very welcoming group here and would love to just help you along your journey. We know how difficult it is trying to become a profitable trader, and anybody that hangs around for a long time deserves to get some attention and some help, and we're all just trying to help each other out in our journeys because it's such a long, difficult journey. I've been at it for over 10 years now, and really only recently have become profitable. Okay, so if this can push down one more time, we'll get into another buy right on these lows in here. So another push lower, can get into another buy, and then we'll get into two buys down at this level. Just gonna measure to see how the size of this is. Okay, that's almost 4 pips. So okay, get into a buy right here, and that target comes in just under these recent highs. So that's a good target for a 3 pip take profit. It kind of seems like it's gonna head back down again, so we'll just be patient to wait for it to come all the way down to this level, where we'll get into a couple buys. And then as we take profits, we'll also take losses on those upper positions. Oh, Larry's saying, "Where's the birthday cake that I made for you?" Oh man, Larry, it's in the closet. I forgot it in the closet. That birthday cake that I made for you this morning. Reggie says, I found trader on the street online and did try the strategies, including the wobble. Wasn't able to master it. Tried on MT4 FTMO trial account. Okay, good. Yeah, FTMO is a good account to just practice and do trials on. Yeah, the wobble is a very difficult thing to learn and takes time. And it may not even be the way that you want to trade. It's just not for everybody. And you gotta, the journey is figuring out what works for you. And so you may be able to take some of the concepts of the wobble technique and apply it to yourself in your own situation. And you may just not even want to do it. You might just want to have, maybe you're one position entry type person, or maybe you're like 3 position entry. And there's infinite ways to do it, but you just gotta stay consistent enough to find out what works for you. But the wobble technique, I think if you understand the basics of it, it'll be really valuable to you. Like, even if you don't do it exactly the same way, like, you can just do it a lot slower too. Like, if you tried it in the past and had trouble, I would recommend trading on a longer time frame and then just operating a little bit slower. Just one sec, I'll be right back. Yeah, I was just saying the wobble technique, especially if you slow it down, becomes easier. And so if you, and another way to do it is to just you can put limit orders in and set them up like way ahead of time, like trade the hour chart and then just place your limit orders on the chart and then just let them work themselves out. And you can have like 10 pip take profits on everything. But I think if you've struggled with the wobble technique, I'm going to try and break it down a little bit in a way that hopefully maybe might work for your understanding. And then also, if we can find a way to make it work for you, then it might help others too. Okay, so we just took profit on that bottom position. And we could just take this one off for a break even, or we can just let it run and see if it's going to pop up and take profit. It's this one's a little bit out of reach over here because it's above that high, so I'm going to just bring this target down beneath that pivot high. So we'll take it just a little bit smaller profit, but increase our probability. I think Alveo is also key. It has the functionality for faster one-click trading. Yeah, Reggie, let's see what we can do. Okay, I was just having to wait for my boys were just making a bunch of noise in the background, but I think we're clear now. So I think what we'll do then today is we'll break down. Okay, so we just took profits on that trade, and now we're up. We're in good shape. We're up around $8 on the session. So when we get into another trade setup, I'm gonna show you where the stop loss is and then how we will base our whole play zone or trading area based off of the stop loss, because the stop loss, although we don't use it to let it get hit, it is, I need it in order to manage the risk properly and correctly, because through the wobble technique, it's not an infinite buying type of method. It's not like martingale. It has an end and it has a limit. And so the stop loss is the end of your zone. Actually, you know what, Reggie, I'm going to show you. I'm going to take off my webcam, and I need to get this off to you guys so you can see it, but I'm going to bring my webcam over to my wall, and then I'll show you what the system looks like. And then if you want, you can like screenshot it too. But I can also get the document over to you guys. But this is how I'm basing my trading off of. You can see it's like a pyramid, And so as you enter your layers, you stack in the same way every time, and then you get in heavier and heavier, and then the stop loss is at the bottom, and there is a bottom, so that if you hit it, your maximum risk, the stop loss is right behind your risk. And I think that's something that was never really made clear to me, but it's something that I found that really is necessary in order to make it work. So I will get that document over to you guys. Maybe if you want to like give me your emails, I can email that document, and then you guys can just look at it and study it and do what you want. But I will also try and demonstrate here this morning too. Okay, so right now I've got 50 pip stop losses on, and the reason for that is to be able to accommodate these big swings that we're currently having. Like this is a 32 pip swing in the market, and we've got, these are based off of the price cycles that we have, and these are recent price cycles. So we've got this other price cycle here of 37, 36 pips from there to there. Let me just show you what I'm looking at. So that would be a price cycle there. This would be a price cycle here. This would be another price cycle, something like this. And when we measure these price cycles, we can see that they're like 35 to 40 pips. And some of the bigger swings are still like 50 and 60 pips. And that's due to the volatility that we've had from last week with the war. And so I'm accommodating for the average recent swings with the stop loss values. So I know that my 50 pip stop loss, if I just have a big swing in the market, I'm not likely going to get hit with my entry. And that's an important part of using the wobble technique. But once I get a trade on, I'll show you where the stop loss is and how we will base the whole trading zone based on that stop loss. And it's just based on the image that I showed you guys. But if you want to leave your email in the chat, I will take that down and I can send over that document to anybody that comes in here. And when you execute it well, you can pretty much trade any side of the market, which is it's a super powerful thing to know and understand. Like most of the time, you'll see that I don't really care that much about where the market is going or like the general bias. I mean, it's good to know those things, but we could use and apply this wobble technique and methodology to the chart on either direction on the charts, because we know that the swings are generally under 50 pips. And if we enter into the market, so okay, so I'm going to just trade both sides of the market for a demonstration. So when we get into a pullback here, I want to make sure that we've got, because my targets are at 3 pips, I want to make sure that the take profit comes in at a good target spot below any highs. We want it to be able to get in before having to make new highs. So as this pulls back, We've got just 3 pips there, so it's just enough. So I'm going to squeeze it in. That take profit comes up right on the recent high, so that just works. And we'll go out to the 15-minute chart here for a sec. And I'm going to take off all these objects to clean it up. There's a lot of drawing on here. All right, so here's the stop loss down here. This is our entire playing zone. And so the way we do this is we're going to stack into that pyramid that I showed you, but we're going to stack into it on levels. So it's not random, based off of like support and resistance and the stop loss. So we'll, as this market comes down against us, we'll buy at these levels. I'll put probably another one back over here. Just trying to find out how far we got to go back. Yeah, that would probably be the last level for buying. And so we would essentially, we would buy and stack appropriately on all these levels. So right now we're in one level. So in this case, because the stop loss is 50 pips, I've been doing like 3 layers of one trade because I have to stretch this out over so much space, rather than like what I showed you. It said like 1 trade and then 2, then 4, then 8, then 16. I'm doing like 2 to 3 layers at one before I'm starting to stack heavier. So we just took profits on that trade, and I don't know. I just don't know if I want to get into shorts on this one. Well, see, the reason I'm happy to go long is because we've got so many support points underneath. Now, if we're going to go short, we've got to have resistance points to work with. But the problem is if it clears this high up here, then there's nothing else to work with. It's got freedom to just keep going. And so I don't really want that. That's what we would call an outside range. And so the reason I'm not really trading the short side is as soon as this market starts to break this high over here, it's just got all kinds of free space to travel. But if it goes down, I've got all these support points to work with, recent data that we can work off of. I hope that's starting to make sense, but if it's not, we'll just keep going through it and make understanding out of it. I mean, if that's what you want, if you want to learn the wobble technique, we'll just keep drilling it. And feel free to ask any questions, because the more I need to explain it, the better I'll get also at communicating and teaching it too. So we can just work on it together. So now we'll go back down to the 1-minute chart, and then we'll find some levels that we can trade off of. So we've got this level here. So now when this market pulls back, we can get into a trade here. Then we can get into a second layer down here. And then we can get into a third layer down in these lows. But what we'll do is if it comes down all the way to here, we'll get into two or three trades down there. Let's just put 2 for now. So now as it pulls back, we can go 1 trade, another layer of 1, and then if it comes all the way down to here, we'll go into 2. We'll probably do 3 because this space is, there's a lot of space between the top and bottom. So if we pull back and just went all the way down to those bottoms, we would be pulling back 19 pips. It's almost a 20 pip run. So we'll get into 3 trades down here. And then, so when the market comes down, remember we're playing steps ahead too. We don't know what the market's going to do, but we're preparing way ahead of time. So then when this market bounces back up, we'll take profits on 3 trades, and that will pay for the loss on this upper trade. And so essentially we'll break even on that whole section of trades. We'll take 3 profits at $1.50. So that'd be $6.50. And then when we take that $6.50 win, that loss, we'll take it here. That will be about an 8 pip, probably 7 or 8 pip loss. And that pretty much breaks even on that set. And that's what we want. So then you're bringing your cost average down. It is hard to explain now, and I'm trying to explain it to you. But essentially those buys that we place down here are going to pay for the loss up here. And then we'll just have one more trade that's sitting there. And then when the market comes back down again, if it comes back down, we'll buy it again. And we can put 2 or 3 back on again. And then we'll make more profits, and then we'll start winning. So rather than just breaking even on those upper positions, we'll be starting to win with those profits. And then we don't need the market to go all the way back up. We only need it to stay close to us. So if we stack this right, we're only ever like 1 price cycle away from winning. And that's the premise. So let's get into a buy here. Man, LVO is just not opening for me. Not sure why it's struggling today. Reggie, it's not quite hedging because we're taking buys and we're not going to take sells in this case. But it is going to make up for the losses. So we're going to keep adding enough buys to make up for the losses. And so my rule is when we get 3 layers away, so let me come back to the chart. So we're just 1 layer away right now. That's good. If we come down 2 layers away, that's also still good. We're still within striking distance of both targets. But as soon as we get 3 layers away, now we're starting to get too far away from our original position. So my rule is that when we get 3 layers away, that now we need to take losses on the first layer. It's just considering it a loss, but we're going to take that loss at a much cheaper price. So rather than letting that first layer come all the way down and stop out for a loss, we're going to take some buys and profits, and we're going to take the loss at a much cheaper price up here. And in that way, we'll continually maintain control of the losses and be taking cheaper losses rather than hitting stop losses. And you'll find that when you position yourself in a good spot, that so much of the time you won't even have to end up really taking losses. Because here's another layer again where we're probably just going to take profits again. And we'll keep doing that over and over and over. But it has an end. The stop loss is the end of the system, and you have to just close everything. When you hit the first stop loss, that's the end of the game. because when you get in that far, you're in a lot more trades too. So your risk is up, but we mitigate the risk by keeping that stop loss close. Now, the good thing is the stop loss is based off of all the other price cycles, and it's not likely to get hit. Because we measured all our price cycles, we know that chances are we're not going to hit that 50 pip stop loss. So it's an unlikely situation. We always want to keep it that way. I'm going to put my email in here, and you guys can also just email me whenever you want to. So just feel free to email me, and then I can share that document, Google Doc, and be happy to answer any questions whenever you have them. And just if you want to keep coming here, we will keep drilling this until you understand it. It is such a valuable way to trade. It's so powerful to be able to take your losses when the market's coming back to you rather than when the market is going away from you. And you can also do the wobble technique without using take profits also. So you could just like keep stacking into the trades as the market's going against you. And then when it pulls up to a break even point where you're making money, you can just take that trade off there too. Or if it, if it's really going in your favor because you're in the direction of the trend, then you can just make money on the whole set of trades. So that's another way that you can apply the wobble technique. And then also, if you're familiar with FTMO, we are trading this account, which is the second phase of the FTMO challenge. So we just need to get this account to $10,000 at 10,500. So I'm hoping that we can trade this together. We'll hit the $500 mark, and then we'll turn this into a funded account. Okay, cool. You want to master it? Well, you keep showing up here, and we will help you to get there. And while you're trying to master it, Larry can get it, and I'll get better at it. And we've got another guy, Vin. He comes in here most mornings as well. He might be here any minute, actually. And he can keep learning it with us too. The purpose of this is just to create a small community of dedicated traders that are just trying to help each other out in their own journey. All right, Reggie, that's amazing. Would love to have you. So you're in Guyana. What time is it there for you? Like for us, we just hit 9 a.m. Eastern. Yes, it just turns out you're in a group of believers also. Yep. Saved by the grace of God, only by his grace. It's nothing that I can boast about because it was a free gift. Okay, I gotta just try and get my Alveo loaded up for a second while we wait for the market. Yeah, that's so cool, Reggie. That's super cool. Yeah, it's very good to meet you, Reggie. So good to have another believer here. Reggie, I'm not seeing your email just yet. Yeah, I'm in Canada. Oh, you used to live here for a few years. Okay. My brother-in-law is also from Guyana, and he lives here now. Oh, there it is. I got your email now. All right. Yeah, I'll get that stuff over to you when we're done. And here's Vin. Vin just joined us this morning, too. Good afternoon, Vin. Got a good little crew going now. Vin Reggie joined us this morning, and he said that he in the past he came to Trader on the Street or the excuse me. He's tried to master the wobble technique. Oh no, Vin. Sorry to hear that. Yeah, we had a couple big swings. So I guess you were buying then, and it swung down a little too low. Okay, so I just added a layer up here. And now when it pulls back, we've got this candle. We've got 4 pips to the next pivot high. So now if it pulls back onto this line, then we can get into another buy. And then we already have our other layers set in place so that we can buy at all those levels. Okay, so I've got my finger on the trigger, and we'll buy right there. Perfect spot. That target comes in right on those body highs, so that's good. And then we'll buy again at this level. Hey Vin, how big were your stop losses? Sounds like maybe, well, not quite quite big enough to accommodate the swings that we got, but I'm just curious as to how big they were. Okay, they were 35 pips. So Vin, I just want to show you something that hopefully can help to take away from this morning. So these swings, if we measure these, I'm sure this must have been maybe one of the ones that got you. That's 32 pips. So the 35 pip stop loss should have been actually pretty good. I've been using 50 pip stop losses just to accommodate for these bigger swings. Like from here to here, like that was a big swing. That one was 55, 56 pips. But I've been using 50 pips just to be able to have lots of breathing room for these big swings. And that is just like a function of measuring the recent swings. So if you take a measurement over like the past 6 or 7 swings, you can get an idea of the price cycles and whether your stop loss is at a good level or not. So this one is 38 pips. Maybe that was the swing that got you. But if you bump up your stop losses to 50, there's a much lower probability that your stop loss is going to get hit, even if you're buying at the top. Like in this case right here, if you're buying up here, your 35 pip would be getting hit, but if you had a 50 pip, chances are it would not get hit. And we want to try and maintain as much probability as possible, so we want to be able to accommodate these big swings also as much as possible. I'm not saying that 35 pips is wrong, especially if you use that all the time. You can absolutely just stick with that. But I'm saying that like what I've been doing is just bumping up my stop losses a bit because the swings have been bigger the past week and a half than what I think we're used to. But if you were to buy this market as it was pulling back, your 35 pip stop losses would still accommodate these swings. So if you're that is if you're not buying at the top. So if you waited for a pullback in some case, like maybe I mean, if you were back here and you waited for this pullback, that one would have, you would have survived that one. So if you waited for a pullback in there, but yeah, it would have been really close. I think just bumping up your stop losses a little bit might help. Yeah, the bigger stop loss is a bit better for now. It just makes it a little bit, gives you a little bit more wiggle room and a little bit more breathing room for these big swings. And so if your stop loss is going to be bigger, that means you also have to size down a little bit, depending on how big you're entering. Like in my case, with the way that I'm trading the wobble technique, the way that I'm sizing down is the spacing between my layers is bigger. So that means I'm adding less positions when my stop loss is bigger. So now when I've got my 50 pip stop losses, sometimes they're 8 or 10 pips apart on the layers. So if we go in here and we measure like the difference between this layer and that layer, that's 6 pips. The layer from this bottom one down to here, that's 8.5 pips. And so that just means I'm going to be slower to enter, rather than if I have a 35 pip stop loss, I'll be adding more positions quicker. I hope that makes sense. I'm not doing a great job of trying to explain, but essentially I'm saying that when my stop losses are bigger, I'm sizing down by taking bigger spacing between my trade setups. So I'm sizing down also when I increase my stop losses. Okay, so we are now about $12 on the session. Started at 10,077, and now we're at 89. Yep, you're welcome. Hopefully that makes sense. And if it doesn't make sense, just say, Josh, I don't get that. Just tell me, and we'll find a new way to make it make sense. The point is that we all can get better at what we're doing here. And if you've got the question, chances are somebody else has the question too. Okay, so let's just throw the history back on here and we can see what we've done so far just while we're waiting. So right before I got on with you guys, I took this buy right here and it took profits. Then bought on right here, bought here, and then bought here. And you can see there's like 3 or 4 trades down there. They took profits, and then I took losses on my upper trade. So that's a way of mitigating risk. And I was 3 layers away, so I took losses on my first layer. And then it came down again, and I bought, and then I made profits. I also took off a loss right there also to keep mitigating the risk on those layers. And then it came down, I bought again, came down, bought again, and I just started making profits. And we were profitable down in this position, even though I started buying up here. we were ahead at this point, so we didn't even need the market to break up. And then we just ended up still buying anyway. Just kept taking those buys on the pullbacks, and we can do it again. And just keep cycling through these iterations, going over and over, knowing that that 50 pip stop loss is not likely to get hit because we measured the price cycles. We know that most of those price cycles do not run 50 pips straight. And so we just know, based off of the price cycles, the probability is we're going to win. And we want to maintain that probability as often as we can. It's been pretty slow grind back up. You can see the market shifted from, we had these bigger swings through the earlier morning or in the London session, and then we've had these smaller, choppier moves since we started trading together. Oh man, I cannot get my Alveo to open back up. I wonder if I just need to reboot my computer. I mean, the good thing is I think the market would have taken profits on all my trades, so hopefully it did that. But yeah, I just can't get it open. So now we can wait for a pullback. I can't remember if I talked about why we wouldn't short if Reggie was in or not, but I'm just going to go over that again. Because most of the time you can just trade both sides of the market with this methodology. But the reason I'm not going to short at the moment is we have a couple more highs that are coming in, so it's not an outside range yet. But as soon as, here, I'm just going to get rid of the trade history. So as soon as the market starts to break this high, at that point, there's nothing left to stop it. We have to go so far back to find data to work with when it comes to resistance or overhead resistance. So the reason I'm not shorting is if this thing breaks that high, it could just keep traveling upward and I have nothing to, no help. Whereas if we're going long, we've got all these different support points behind us from previous data that's close by. So there's lots of areas of help that we'll get if we're going to buy. And we could trade the short side and say, like, if it breaks this high, we just stop out. Like, that's a way you could trade it too. If you want to trade the short side. We've got like 19, 20 pips before we break that high. We could probably trade the short side. I might just do it for demonstration and we'll just take it as it goes. Because I'll show you how we'll manage through it. If it does break up, we can probably still manage our way out of it. But now we're pulling back on the long side. So let's get into a long right there. And our target comes in before the last high. So that's a decent target spot. And we've already got all these layers plugged in so we can just buy on them. So we buy again here, buy again here, buy here. We'll buy a much bigger stack way down here. Because in that stacking pyramid, we're adding size. We're getting bigger as the market goes against us. But we're trading with the trend. Right now, the market has been heading up. So back out to here. It's not like we're just we're always playing steps ahead of the market. We're not chasing the market. We're always ahead of it. Making some sense, Reggie, do you think? If it's not, just say so. We'll just tackle it in a different way. But just keep showing up and we'll keep going over it together. Just keep doing it. And you can trade along if you want. Don't really recommend trading along in a live account, but simulated is a good thing to practice in. And I will pass that document over to you, and then you can just use it and you can size appropriately. Okay, cool. Yeah, definitely takes practice, but it is a powerful method. It's taken me years to understand. Something that I didn't really understand is that there has to be an end of the line. Because whenever it was taught to us in the past, it just seemed like there was no end. You just keep, and as long as you keep taking your losses off, you can kind of do it in a way where it's like it doesn't end, but eventually you're going to hit a stop loss. There'll be a market that just doesn't stop at some point. And so you've got to have an ending point somewhere. It's not a martingale method where you just keep adding size as it goes against you. But when you apply this method on top of measuring your price cycles so that you know it's not likely to hit, you want to keep applying this system in a way where the stop losses are just so unlikely to get hit. You just don't want to let them get hit if you can help it. Eventually they will, but you'll keep it so rare that you'll just make money most of the time, and occasionally you have to take a hit, and that's okay. It just won't happen very often, so you can make money most of the time. All right, so we're at the stock market open right now. We'll see if we'll get some volatility coming back in. My main challenge was actually managing the trades. I tried to put on too many trades at one time. That is a classic mistake that people make with this method. What I'm teaching here is that I mean, I know that Sean tries to teach us also, but we need to stack in proportion to our stop loss and to our layers, our levels that are marked out on the chart. So generally, like the document I'll send, it has 1, 2, 3, 4, 5 layers, but I've been using like 2 or 3 extra layers on top that are just one trade, and that's to space out my trades a lot more. So like my first layers, okay, as this drops, we're going to get into another one right here. There's a lot of volatility coming in right now. That's good. Okay, and the good thing is we've already got our layers already marked out, so we know what we're going to do ahead of time. I'm going to get into another trade right here. So that's the third layer, and they're just at 1 right now. Probably going to go into 2 here. Yeah, 2. Okay, just took profits on one of those. And we'll take a loss on that upper one. And then when it pulls back down, we'll get into Another one. I'm just trying to get my... Still trying to load my Alveo platform. Okay, when this pulls back, we'll buy it again. And so, oh, those trades did not equal, those take profits were not good. See, I made like only $1, not even, and then I took like a $2 loss. So I really should have broken even, but they were a little bit less than break even. So, okay, I'm just gonna get ready to put on another layer when this drops down. But we'll make the money if it goes against us again. So here we go. Right here. See, now we're only one layer away. So we mitigated that layer and we don't need it to go, we don't need the market to go all the way back up there anymore. See, now we're profitable right here. So we can take that for a break even, take that trade off for a break even, or we can let it sit and see if it will go back up. Either way works. Okay, let's buy again here, and then we'll buy one more on the line. Actually, no, we're not going to do it this time. This time around, we'll buy down here for the third layer. Because we want to just keep this. I want to keep the price is close to one price cycle. We always want to stay one price cycle away from being profitable. And so now if it's going to continue down, I want to be able to keep that same layer stacking that I started with. Because it's heading down now, I'm just going to only do one here, and then we'll do one here, and then we'll get into like 3 down here. And you predefine your layers so you know exactly how much that you're going to put on. Okay, so we took profits again. So when we started, we had $2 of winning here, then a $2.80 loss, and then we made another $3 here. So we're profitable. So we can just close out here. I'm going to do it for demonstration. Once this pops back up, we're going to take this for a break even. Or if it goes down, we'll buy again. So right there, take that for a loss and we win. So we started trade history. We started by buying up here, but now we're profitable down here. The market has gone against us and we're profitable down here. And we've got the history to show you. We took a 280 loss and like a break even, but we made $2 plus 3, 1, 2. We made about $5 and we took about a 280 loss, maybe 290. So we net 1 even though the market is going against us. So that's like a really small demonstration of the process that we're using. And we will always want to keep doing that. Even if the market goes like 20, 30 pips against us, we'll get in way heavier down at the bottom to accommodate for that extension against us. Is that cool? Do you understand how that works a little bit with that one little mini demonstration? And in reality, I could have just left that trade back on there too, and there's a good chance it'll hit, but I just wanted to get rid of it for demonstration to show you that we can be profitable as the market is going against us. Okay, cool. That's clear. Nice. So now that we've done one, we'll do it again. But we just gotta wait. So now we can buy here, and then we can buy here, and then we can buy here, and this market can keep going against us, and as long as we stack it properly, we can win without having the market go all the way back up. And that is a powerful position to be in. The market can go against us and we can make money. Okay, there we go. Good volatility. I feel like there's, like, it's strange how it's acting right now, but it's okay. We'll take it for now. Okay, there's profit immediately in like 3 seconds. Just timed it right, so we'll do it again. Buy here. It's probably going to drop down now this time. So we'll get ready to buy here, and then we'll get in 3 down on this layer, all the way down there. I'm doing that because it's going to take just a little bit more than 2. As long as we size it and stack properly, this market can run 50 pips against us or 49 pips against us, and we can make money when it pulls back just one price cycle. Okay, we're going to trade the other side, and I'll show you how we do it the other side too. Okay, so we'll get into a short here. And then we're can get into another one right in this little spot here. And then we've got this level here. And then we've got a few different options as we get up here. So we'll put this spot. We've even got another one right here that we can probably go off of right there. So these are all overhead resistance. And so we just made money on the short. So let's go and buy it here. So I know it's getting a little confusing with all the lines, but essentially we're setting up for trading both sides of the markets. We've got our layers already plugged in, so we know where we're trading on both sides of the market. I'm going to take off the trade history now just to make it look a little bit more readable. So we'll get into a layer here. And then when it drops all the way down here, we'll get into 2, maybe 3 trades. And as long as you're sizing appropriately, you can, like, you just want to be lighter on everything than you need to be. Like I'm saying, you can be 2 or 3 trades because I've got things set up. I'm only trading a point. Okay, so I'm just getting my finger on the trigger right here. So now it's our second layer. And that target comes in below that pivot. So this is and below that red line. So that's a good spot. So if it comes all the way down here, we'll get into 2 to 3 trades. And like, I'm not always gonna find the exact bottom, so I can try and get into 2. Maybe if it drops far enough, we get into 3. It'll just depend on how it gets down there and if we can find the bottom, or it could just keep shooting down also. Okay, there we just took profit on that trade, and we're only 2 layers away right now, so we don't need to take any losses on the top layer. We can wait for it to pull back and we buy again, or we could take a break even here if we want to, or we can let it sit and just see if it will go up and hit the take profit. Hey Reggie, super good to have you with us. And yeah, I'm glad to help out as much as we can, and look forward to having you come back with us again. That would be great. Yeah, we'll stay here, the New York Open, every weekday. So look forward to having you back. Have a good rest of your day. I'll catch you later. See you, Reggie. Have a good day. God bless you. All right, so now as this pops back down, we'll just get into another buy. Just got my finger on the trigger. We want to get on the line or below that line in order to make sure that target comes in to a good spot. So it didn't quite get into it there, but we'll just wait for it to pop down a bit further. Okay, getting finger on the trigger again, getting ready. If it pops down here. Need one more little push. Didn't quite get it. Okay, looks like we might get another shot at getting that layer on. Okay, almost there. Get one more push deeper. And it's really slowed down from where we were when the market opened. We had that good burst of volatility, and then it's slowed down quite a bit. And we wait. Right there. So get into one there. And then now it seems like it's got the energy to break down. And then, so if we pop down again, that'll be like the third attempt on the 15-minute chart on that longer term. Yeah, it would be like our third try coming back down. So and it's still inside that trend. So that third attempt down and in the trend, that should be a good spot for a pop back up. So that should be a pretty high probability trade. If it pops down there, we'll get into a good chunk of buys. Okay, we just hit the top of the hour where we usually see some good volatility. So let's see if we can hit a few more trades. I don't have a goal, but it would be kind of cool if we could see the account get over the 100 mark. We shall see. Just missed that target. If I had been a little slower to enter that trade, we would have hit the target on that wick. But I jumped onto it a little too quick. It's okay. I want it to go down there and hopefully we get a good opportunity to put on a few more trades if it pushes down. Should be some good opportunities. Okay, so it had tried to go down and it couldn't make it that time. If we can make it through most of that wick, then chances are we'll break that wick high and we can hit that target. Just halfway through that wick. If we can get a little over half, the chances are pretty good that we'll hit that target. Okay, closed above the previous candle, but okay, there's the volatility coming in. That's good. And we hit the target. And we're just only one layer away, so we can just wait and see if we can hit the next one. Or if it pops down, we'll get back into another buy. Okay, so now we've closed above that previous wick, so we've got a turn. I think that's a turn on the 5-minute chart now. Okay, it's freezing up on me. Is everything freezing up? No, it looks like my platform OBS is working. Okay, there we go. Okay, buy right there. Okay, so we had a wick on top, looked like it's going to push further down, and then it just kind of stalled out, and it didn't push down yet. But that wick should indicate another push down for the next candle. See if we can break that low over here. And that's when we'll get into a bigger stack over here. and it is pretty choppy. And that chop is good for us when we're trading like this. Okay, we tried to make a move lower. Now we just triggered above this candle's high right over here. We didn't close above it, but we just broke it. So now if we can clear these highs, then we've got to turn back up. This one is now the nadir candle. So a break of that candle's high will be the trigger for the turn up. Okay, it's just bumping into that trigger. Ah, it's frozen again. Okay, so now we've got this chopping pattern heading down. It really makes me want to start trying to buy the bottoms because it's not really breaking down, it's just kind of like grinding down. If we can find a bottom, we can start taking profits and getting rid of some of the upper trades. As long as we stay within 3 trades above this level, then we can use 2 or 3 to try and find a bottom in here because it may not get all the way down. It's really struggling to get down. 2, 3. Okay, now we're getting that turn as we trigger over these highs. And if it pushes back down right into these lows, I'm going to buy it down here. Because it's been grinding down and it keeps starting to try and make the turn and then it gets pushed down. So we may not make the turn here. We just hit the target on that one. So now if it pulls back, I'll try and do it again because it's making its turn. Okay, a strong bull candle with a really strong close. So now if we get a pullback, I'll get back into another long because we've now officially made the turn. So then the first retracement will be a pullback. So this could be a good buy setup again. It's freezing up on me again. We gotta try and finish this up. Okay, another strong close on that candle. Just missed that target. Okay, if it pops down, I'm just gonna still buy it anyway. Because this is now the first pullback, the first retracement. I'm gonna put the trade history back on. What the? Okay, there's that last target hit. So we started out the session buying way back over here. And so we just kept buying, and then we made profits in this stack, and we took some losses and took profits and losses, and then we were in a profitable position down here rather than up here where we started. But the market came back up anyway, and we just kept buying all those dips. And then we did the same thing over here as we did over here. So the market dropped down. We got into a heavier stack of trades. Then we took the loss on that upper position, and then we were in a profitable spot. Market came back down, and we just kept buying all the dips. So that was another just really consistent session. So we will finish up there. Let me just see what we made today. So we're at 10,098.51. And we started the session at 10,077.77. And that equals $20. And then we divide that by $10,077.77 times 100. And it puts us at a point